get you to become a homeowner because everyone deserves to be a homeowner. Now, when I talk about building credit, one of the things that the bank is going to be looking at is your credit score. However, it's not just about the credit score. They want to see the trade lines. I know that you probably have heard different credit companies that probably want you to pay them monthly to better your credit. One of the things that people need to realize is that your credit score basically is the report card of your credit. So it's not necessarily a magic potion or something that's going to work with credit repair if you're not doing something about changing your habits. So in that, I want to tell you that I can help people who have up to at least a 500 middle score. However, just because I can help you get into a mortgage because you have a 500 middle score is not enough. You have to have the trade lines. You have to be paying things on time. You have to show that you have the ability to make those payments, that you have money saved to, in case something happens, you're still able to pay that mortgage. And you want to be in a situation where it's not like having a rope around your neck. You want to have a home that you can afford so that you can have your family there and have happiness. You never want the mortgage to bring people sadness because maybe they mortgaged more than what they should have. That's one of the things that I definitely do with my clients. I can tell you about the debt ratios, but if we just go by the debt ratios, meaning what your debts are divided by your income, that's not enough because right now the banks are saying that they might allow you to go up to 50% of your income. But honestly, if you make $5,000 a month and $2,500 of it, which is 50%, is going to your mortgage in this day and age, how do you pay the car payment? How do you pay the light and all of the bills? So one of the things that I like to suggest to my clients is, let's not go to 50% debt ratio. Let's go to 38% debt ratio. Let's get you in a house that you're going to stay in forever and look at things long term, not just look at the moment. Now, there are people who have the ability to qualify for a mortgage and maybe they have more money or maybe they have other income sources. That's also something that is very important. So now I just want to talk to you about your income. One of the things that the banks want to see is that you've been working for the last 2 years at least. So they're going to want to see the last 2 years W-2s. They're going to want to see 1 month of current pay stubs. If you're self-employed, you really need to be self-employed for 3 years because they want to see 2 years of your personal and tax returns, as well as a profit and loss statement. Now, there are alternate forms of income documentation, just like there are alternate forms of asset documentation. I can tell you that at the bank that I work with, we can get people approved. And I know that we can approve people even at a higher debt ratio. However, as someone responsible and as someone who cares about my community and as someone that wants to help people into homes because they deserve those homes, they deserve to keep those homes forever, I'd like to have different ratios that I go by when I speak to you about a plan to make sure that the home that you buy is going to be your forever home if that's what your desire is now, or that you're going to sell it later. Make sure that we put you in a position where you can do that without being stressed financially. So income is very important, and we could help you with different types of income. Depending on your income, if you have any questions, I can help tell you exactly what documentation the bank is going to want to see. Now, the next thing I want to talk to you, and I was wondering, are there any questions by chance, Sharon, at this point, or no?
No.
If anyone has questions, you can feel free to interrupt me because I don't want to just be talking. I want to actually have this to be interactive and address any questions or concerns that you have. You don't just have to wait until the end. The next thing I was going to talk about is in being financially prepared, and this is something that sometimes people don't think about. You really need to have money for your down payment, for your closing costs, and for reserves. Now, the amount of reserves is going to be determined by your credit. If you have good credit, maybe the bank will only want 2 months of reserves. If you don't have very good credit and you don't have other compensating factors, they might want 4 months of reserves or 6 months of reserve. It all depends on putting the whole package together based on your credit strength and your financial strength. So I like to say that if you're going to buy a home, you want to save at least 5% for your down payment. And you want to save, I would say, at least 2 to 3% for closing costs. Now, there are mortgages that we can do. There's down payment assistance, There's many programs, like I know the city of Lauderhill has a program where they give you a grant, and it's as long as you stay in the property for 15 years, I know that there's certain advantages from having that mortgage where I believe it's even forgiven. I don't know all of the details, but that's one of the programs that there are. There's also the Heroes program, which is opening up again in July for teachers and people who are policemen and things like that. And that also gives about 5% of the down payment. However, this is the one issue that we're having. These programs run out of money, and they run out of money very quick. So what some of the banks have done, and some of the banks that I work with do, is that they do a down payment assistance, and they don't run out of money, but that is because they are charging you an interest rate for that. So I have one program that you can do the down payment. Your interest is like 9%. You don't have to pay that interest if in 5 years you don't sell and you don't refinance the house. So you would have that for your down payment, but then that would mean that you're able to get into the home sooner with, let's say, that 5% down payment, but you still have to have your closing costs. And there's where I'm saying like 2 to 3% of the purchase price that you should save for your closing costs, because there's going to be taxes that you're going to have to pay in advance. There's going to be homeowners insurance. There's going to be all of the closing costs that are there. So then the down payment would be deducted from that as well, so that it would show us exactly how much more you would need for your closing costs. But we can definitely help you with a mortgage to cover the down payment. And you would just need to, sometimes the seller can pay your closing costs. It all depends on how we can structure the deal. And my job is to structure the deal for you in the way in which it's going to be the smallest payment for you. And I wouldn't want you to be in the highest possible interest. However, that is going to pretty much be determined by your credit and your desire to be in a home, right? Because if you want to be into the home sooner, then I can see using down payment assistance, whether it's a mortgage or whether it's one of the grants. But if you, for some reason, can't do that, then at least you know that there are other possibilities. Now, as
We have
far
two
as
questions.
awesome, let me.
Okay. Are you able to see the chat, or do you need me to read it to you?
I'm opening it up right now. Okay. The first question that I'm seeing is about what about those people who have an inconsistent income, for example, contract workers? And that's a great question. Contract workers, which means that you're receiving a 1099, we can help them. But again, we're going to need 2 years of 2 years of income verification for you. So if you're 1099, it means that we're going to need to see the last 2 years of tax returns, as well as the current profit and loss statement, because the tax return is going to show us the past, and your profit and loss is going to show us what you're earning now. However, I know that some people have inconsistent income, but as long as it's been about the same amount for the last 2 years that they can average it, then we can use that income. So depending on the type of loan that we're doing, that can work with a 1099. I also have a program which is bank statements. And a lot of my self-employed 1099, I would say like nurses, people who receive 1099s, who are self-employed working under their name, or who are self-employed in any way, we do have a bank statement program. It's what they do is they look at the last 12 months of bank statements, and they look to see, all of your deposits, all of your withdrawals, and from that they decide exactly what your income is. So we do have options to help our self-employed borrowers or our 1099 borrowers. And there's so many of them, and you deserve to be a homeowner. And I can definitely help you with that, because we have so many programs for which you would probably qualify. And I'm never going to put you in a program that doesn't make sense for you. I can definitely promise you that. Let me take now the next question, which is, do you know of down payment assistance that allows you to buy condos and townhouses? There are some down payment assistance programs for the condos and townhouses. Now, what's going on with the condos and townhouses is that they are at a lower loan to value. So they want you to put more money down. So the down payment assistance is not going to be as great as it is if you were going to buy a home. But there are some down payment assistance programs for condos and townhouse. It's based on you qualifying. So we would need to see your credit and submit it to see exactly how much of that down payment assistance you could receive. And also if there's an interest rate, exactly the interest rate is and the payment and everything like that. And okay, those are the 2 questions that I see so far. If you think of anything else, please feel free to post it. I'll definitely do my best to look at it and help you. Now, I was just talking about the income verification, and I did tell you about that. For self-employed, we're going to need the 2 years of business and personal returns, as well as a profit and loss statement. What I also want to let you know is that it doesn't have to be CPA certified. It can be TurboTax. It can be the profit and loss that you prepare. Now, I'm reading another question. There's a lot of associations that don't accept it. Why? A lot of associations aren't accepting the down payment assistance program because they want you to have actual money basically in the game. So for a lot of condos, they want you to have that 20% down. So if when the contract is done by the realtor, it shows that the financing is going to be that certain way, then the association is going to want you to honor, the association is going to honor what the contract is. So they would have to look at the contract, but at times they will accept it. It is based on exceptions and they have to review it in order to see if it's going to work. But I have seen that you can use down payment assistance for townhouses. Is there any other, and there's a lot of associations. Okay, I just told you why they don't accept it, but if you have any questions about it, please let me know. Associations are tricky, and I'm glad that was the last thing that I was going to talk to you, which is about property types. You can always, buy a single family residence, which that's usually referring to a single family detached home where it doesn't touch the walls of any other home. And that's like the kind of property in which you're going to have the most ability to finance the higher loan to values. If you go into a condo or a townhouse, or if you buy a home that's in a planned unit development, then you have to take into consideration that you're going to have your mortgage payment, your taxes, your insurance, and the HOA payment. So those are just things to take into consideration when you're budgeting to decide on your home, that the taxes are going to change and they can go up to 2% per year. And when you look at the taxes of a home that is selling, do not go off of that number thinking that that's what it's going to be with for you. Because I've had situations in which the person, let's say they're a veteran, so they don't pay taxes. So the taxes are zero, but you still have to use a number to calculate what your taxes are going to be, unless you happen to be a veteran also. And normally, if you are a veteran, what happens is that initially they don't give you that deduction. You have to actually close on the loan, and then you submit your HUD or your closing statement to them, and that's then when they fix it for you. So initially there will be, it'll show the property taxes, and then it's them that remove it. One very, very important thing also that I want to mention that is becoming an issue, especially for us here in Florida, is our property insurance. I want you to please take into consideration getting a quote from an insurance agent before you decide even on how much you want to spend on a house. Because unfortunately, I'm seeing that a lot of people are buying their homes, they can make the payment, but then they don't take into consideration that the taxes are going to change annually. The homeowner's insurance is going to change annually. Due, unfortunately, to what happened here in Surfside, I think maybe it was 3 years ago, maybe 4, that has caused condos and townhouses to be that much more stringent on their policies and on their requirements for insurance. So in my opinion, if you're able to buy a smaller home and then later on you want to buy a bigger home because that's what you're concerned about, is obviously the payment, I would start with a smaller home and not necessarily buy a condo or a townhouse, just because whenever there's a wall in between or there's an association, that's something else that you're going to have to worry about that is going to increase, because it's never going to go down. Let's get real. I mean, like, the condos associations, the homeowners associations, everything keeps going up. And those are things that we do need to take into account when we're going to purchase a home, because we're going to have that home for a long time, hopefully forever, if it's your forever home. And you want to be in your home comfortably, because we want to be able to have happy families for our communities. Now, is there another question here?
I have a question for you.
Okay.
So do you also help if a person finds a bank-owned home? So there was a previous owner in the home.
Mhm.
The home was foreclosed on for whatever reason from the previous owner, and now the bank has repossessed the home for the value that was left over on the previous mortgage. right? Do you also help people get those homes? And is there down payment assistance for those homes available?
So that's a great question, and it's going to depend. So if they're buying a home and it's a distressed home, meaning that it's a short sale, a lot of times if the home is a short sale, it may not be in the best condition. If the home is not, if we cannot do an appraisal for a home and it passed the appraisal, then we're not going to be able to do the mortgage. However, there are renovation loans that we can look into, but it is going to be based on the market value, not on just, like the remaining portion that was a foreclosure. Because if they have to also, if a lot of times once the home goes into foreclosure and it sells for a lot less because it's been in disrepair and things like that. So that's going to bring the values down in our whole area. So they're not going to want to base it like that when they're selling the home to someone new. They're going to base it on the new price, because if not, it's going to bring all the other prices down. Does that make sense?
Yes,
Is
yes,
it
yes, yes.
awesome? Is there anything else that I can answer for anyone right now? Okay, then one of the things I would like to talk to you about is in determining your income and in determining how ready you are. I just want to give you some numbers that you might want to consider. So when I say that I think you're going to need about 2 to 3% for your closing costs. That means that if you're buying a $400,000 house, you're going to take that and multiply it by 3% just to be on the safe side that you have enough for your closing costs and for your reserves. The reserves, you want to try to have at least 3 months payments, because one of the things that the banks definitely want to do, especially like if we have a little bit of inconsistent income or something like that, they want to make sure that you're going to be able to pay that mortgage. So if for some reason something were to happen, which I can tell you it's happened to me, like a health issue where then I was out of work, so I wasn't able to pay. Well, the bank, it doesn't unfortunately care about that. They want their payment. So we want to be into a situation where it's affordable to us, and we want to have enough money saved so that we don't end up having something unfortunate happen to our house because of our health or because of something else, going down that affects our income. And the other thing that I want to tell you is the importance of home ownership. I think that one of the things that is so important with home ownership is that we all deserve to be homeowners so that we can do whatever we want in our homes. We can grow whatever we want in our yards and things like that. So being a homeowner is important. It helps our community and so forth. So if there's anything that I can help you with as far as home ownership, as far as preparing, as far as helping you with a plan on what you need to do over the next few months to get ready to home ownership, please feel free to contact me. And I'll just give everyone my phone number now. It's 954-449-5933. And my website, where you can go in there and depending on the service you want, you can choose an appointment to meet with me, is fitmortgagesandmore.com. That's FIT mortgagesandmore.com. Because honestly, my goal is for people to be not only financially, not only mentally, not only physically, but to be fit in every possible way. I have experience from being a bodybuilder in the past. I did figure, and I say that when you have to go and do something and you are truly focused on your dream, you can achieve it. So the same way that you can either be a bodybuilder, you can do whatever you want with your life. You just need to have a plan and follow it. And I hope that I can help you with that. If there are no other questions, I'll just wait a few minutes in case anyone thinks of anything. And I want to thank you so much for your time. I hope that you have felt that this was worth your while listening to me today. And please contact me with any questions. I'll stay on in case there's any other questions at this time.
I have a question.
Sure.
So what income right now, based on the cost of real estate right now, that includes the condos and the single family homes. What incomes do you think is best for a person to have? I'm asking questions because this is
Mhm.
being recorded and people watch my YouTube after. So I'm trying to think
Right.
of questions that people would have after. And what income, because from my experience and my surveys, I've done a survey, I've surveyed a lot of people, a lot of people, and a lot of people are feeling discouraged because they're working at their jobs, but their income is around 38 to 40,000, right? Yearly. And what income do you suggest for people to have in this market? And is there help for people who work full time and do not meet that income based on the market numbers?
And that's a very good question, and I can completely understand someone who's earning 38 to $40,000 a year. It's not that they can't buy a home. It depends on how much money do they have saved, because they're not going to qualify, let's say, for as high a payment, but we don't know if maybe they have money saved or there's other incomes that are also going to be used to pay that mortgage.
Mm-hmm.
So it really, we kind of like back into it more. Like what I would say is look at if you go to realtor.com and you put in different zip codes and you look at different homes, how many bedrooms it has, how many bathrooms it has, and like how much it's selling for. Then from there you can go and find out like what the payment would be on that. Like at worst, if the interest, let's do it at 8% because the rates aren't there yet, but it could go there. But it's just for you to give yourself an idea.
Mm-hmm.
And that way you know what the payment is, because I know that we can help as far as a down payment assistance program, but income is something that, you think you need the income in order to make the payment for the mortgage. So that's why I was saying also that sometimes maybe you start with a smaller home and then you sell your home in a few years or so as as the property appreciates and as you also start making more money. Because the one thing that we can't do is we can't come up with more money. We can only work with the money that we do have. So in that case, you really would have to have more money in savings to be able to put more money down to afford the mortgage. But yeah, properties are high everywhere right now. That's like, and I know that some prices are going to be down. The prices are starting to come down a little, but it's not coming down like hundreds of thousands of dollars. So that's one of the things that in purchasing a home, you may want to start with a smaller home and then move up to a bigger home. Maybe, you start off with a 2-bedroom instead of a 3-bedroom, just
Mm-hmm.
because you want something that's also going to be within your budget. Sometimes there's help, but that help is not bringing down your payment. So then you're put into a situation where you got into a house, but you really can't afford that monthly payment. And that's just something that is much harder to deal with once you're in a home and you can't afford the payment and you still have to take the kids to school and everything else. And that's why I try to avoid, when I qualify someone, I try to avoid putting them like at the top of what they qualify for, because what you qualify for government wise and lender wise, it
Mm-hmm.
doesn't take into account the fact that you probably give your parents money to live if you have your parents. It
Mm-hmm.
doesn't take into account the money that you give your kids. It doesn't take into account the groceries, unless because it's not a credit card bill. When lenders are looking at your credit, what they're looking at is in calculating your income. It's not even a fair number because they're only taking the debts that are on your credit report. So if it's only the debts on your credit report, plus your mortgage, plus your taxes, plus the insurance, it's still not inclusive of everything that you pay monthly.
Mm-hmm.
So if based on those numbers, they're saying that you can go to 50% debt to income ratio, that's really setting you up for not a good situation, because your income should not, there should be no more than 1/3 of your income that goes toward your home. And even at 1/3, it seems like that's a lot, but that's basically what they're saying, 1/3 of the income. So I can't really base it on the price of the property without knowing how much money down payment you have to truly give you a good calculation. And depending on who you speak to, they may tell you that you qualify because they're using the highest numbers and not realistic numbers for the person's situation. I always like to look at things as the whole picture and not just now, because income can change, our health can change. And I like my clients to be prepared for if something changes, doesn't change their wealth. It doesn't change their ability to maintain their families in the homes.
That's very good, because we want people to be able to not only purchase, but
Mm-hmm.
be able to stay in the home and also be able to eat.
Exactly. And let me tell you,
You
stress is the worst thing, right? And there's nothing like being in a home and then for some reason someone loses their income and then you can't make that payment and that brings a whole other set of stress. So to me, every person deserves to be a homeowner and deserves to be a homeowner in a position where they don't feel that they have no room to breathe or no room to buy anything else. And I know that in the past, I've seen people who have gone with a mortgage and they've put all their money into it, because whatever they had for the down payment, plus they did have for the closing costs, plus they had to show those 3 months, but they really are not in the right mortgage, maybe because they're not in the right home. It wasn't the right time for them yet. So I definitely like to meet with people and help put them on a plan and understand based on the homes that they like. Look at the areas on realtor.com that you might want to buy a home and see what the average prices are there. And then we can use the home buying calculator to show you what the payment is. And then from there, we'll take your income and multiply that by 38% so that we see if it makes sense for you to have that as a payment. And that's kind of the way that we decide how much home you qualify for. Which brings me to a very good point. I don't want anybody wasting their time. And one of the things that we can do, and obviously that's free, is that I can give you a pre-approval letter. First, it starts with the pre-qualification, which means that verbally you tell me everything. You tell me your income, you tell me your assets. So verbally, I'm going by everything that you're telling me, and I can give you a pre-qualification. So basically, if everything that you're telling me is accurate, you can buy this home. And with that letter, this much home. And with that letter, you can go out with a realtor because the realtor is the one that's normally going to show you the properties. So the realtors are wanting for you to have that pre-qualification letter in order to even show you a property because properties are so expensive. They want to make sure that the persons that are looking at these properties qualify for them. That's one of the things that I can prepare for you is the pre-qualification letter. And what they really are going to want is that pre-approval letters to know that you're ready to go if you like that home. So the pre-qualification I give you first, and then I tell you exactly the documents that we need to turn that into underwriting and have a pre-approval. Once you have a pre-approval letter and you're working with a realtor, you don't have to worry about much because I try to get everything from you up front so that way, once you and the realtor find the house, you're already pre-approved for that loan. So it's about the property because your income, your credit, and your assets have already been verified. It's basically about the property appraising. So please keep that in mind. And when you're serious, one of the first things that I would do is first decide my budget, see exactly by when I think I can manage the payment that I want to have, and then look for that home so that we can help put you into the home. But please, as much as everybody says, hurry up, don't hurry up. Just take your time and make sure that in taking that time, you draw yourself basically a map of how you're going to get there. The first thing is that you want to make sure that you're paying your bills so that you have a good credit score. A credit score of 620 is a good score, but a score in the 700s is definitely better and it's going to give you a better interest rate. So one of the things that you can do to help yourself is to work on your credit habits and make sure that you're paying your bills, make sure that it's being reported correctly, check your annual credit report. You can do that for free at least once a year, and make sure that everything that is on your credit is yours, because having good credit is very, very important. It's going to allow you to buy the homes, it's going to allow you to put the furniture in the homes, and it's going to allow you to have that affordability that we all want in the homes that we have. Oh, and just to give you an example of associations, because I bought a condo many years ago, well, like 19 years ago, and I see that there's a question. I'll answer that next. The homeowners associations go up a lot, so that's something to take into consideration. When we first bought this condo, it was 19 years ago. The homeowner association or the condo association fee was like $179. Today, that condo association is $539.99. So we never thought it was going to go up that much. And having so many people that are seniors, because it's a 55 and over community, that's putting a lot of stress on our seniors right now, in that they don't know what they're going to be doing with their homes. Now, I also know that a lot of people who do happen to be homeowners but are looking for additional cash, or like if you're paying on your credit cards, we can always look into a home equity loan where it's a 20 or a 30-year loan that you're able to have that breathing room and have that if you can afford that payment. So please realize that I can help you with home ownership and then also with a refinance in the future if that is needed. Now, I'm reading the question. I heard that you have to do another check before closing to make sure everything is still good and you can still afford that home or property. Okay, so what happens is, and what has happened is that sometimes people are working, right? And they might change their jobs before closing. It's not something that you should do. It's not something that you could have possibly known that it was the time for you to change jobs, because sometimes we change jobs for, we knew it was going to happen, but we didn't know exactly when. But if you're buying a house and you happen to be changing jobs, that it's going to mean that it's going to have to go back to underwriting to see what your income is going to be now. So in that situation, they do verify your job, that you're still employed before closing. At times, depending on how long the credit was pulled, they are going to pull the credit, because what happens is that sometimes when we want to buy a house, I don't know why, but it seems that the car breaks down every time you want to buy a house, and here you are qualifying for a house based on the payments that you had, and then shortly before closing, unfortunately, your car breaks down and you buy a new car. So now that's a new payment that has to be calculated into your debt ratio. So that is one of the things that, yes, the lender is going to do, because affordability is key. If you cannot afford the mortgage, then it doesn't make sense to put you into that mortgage, because it's only going to lead down a bad path. So yes, they do pull credit. They normally will pull credit again before closing, especially if it's been more than 120 days. And they will also verify employment if you are W-2'd. If you're self-employed, what they look at the profit and loss statement, they'll look at the SunBiz and things like that. It's kind of hard to verify if you close your business right away, but obviously if you've qualified because you've been in business for 3 years, the chances of you continuing to be in business are high, and that's why they go with the 2 years tax returns. One of the other things that you want to consider is the cities in which you buy your home. The reason I'm saying that is because of the property taxes, and the property taxes are going to be different. I owned a home in Plantation. My taxes were one thing. When I moved to Sunrise, it was different. When I moved to Tamarack, it was different. And now that I live here in Lauderhill, it's also calculated a lot differently. So just keep that in mind. My best thing is, and I guess that this is something that we all do, is do your research now on where you want to be and what it's going to take to get there. If you want to buy a house and it's in the zip code 33323, put in the 33323, look at the homes in that area. How many baths, how many baths, how many bedrooms? Is it something that where you would want to be? And then let's come up with a plan on how to get there, because it is possible.
Well, I have actually done some work in reaching out to insurance companies.
Mm-hmm.
And I found out that some insurance companies do not cover certain homes based on their location in Florida. So one of the things I highly suggest people look into is to see what is the flooding of that area, because a lot of insurance companies that cover homes are not covering homes in certain addresses
Zip
because
codes, right?
yes, because of the flooding. And I found that out myself, and apparently the company that I found out that are still covering homes in flood areas is right now is Citizens.
Citizens.
Yes, Citizens. And the thing with Citizens is a lot of people, it's almost like Citizens is taking over a niche area in real estate, and it can be very non-competitive where the prices can be handled to not give favor to the homeowner. I'll say it that way. So the homeowner pays a higher rate because of those situations. So I highly suggest for people to look to see where those homes are located to see the flood, if it's in
The
a
flood map.
high flood area. Yes.
100%. Where I live in Lauderhill, I live just past where all of the flooding happens. Over by the bedding barn.
Mm-hmm.
So I know how difficult. And we do have flood insurance, so that definitely, helps. But the flooding, especially in Lauderhill, is no joke.
Yeah, It is. A little bit of rain, you flood out. So it's just,
I know, especially around this area. But I love Lauderhill, and I love the people here. And I felt like this is like the warmest of all the cities that I've lived in, aside from in Miami. Miami's just, 305 all the way, but
yeah, yeah. 305, yes.
been 954 now for like, 34 years. So I got to get used to that still.
Okay, during this 15 minutes, let me see if anyone has any comments. Right now, no one has
I'm not
comments.
saying anything.
Yeah, right now, no one has comments. So, with my research, so everyone knows, who's on here, know I'm a housing strategist and I have strategies to get people in homes that's unconventional. And I want to suggest for people when they see adverts come out about affordable housing, like for example, townhouses. One of them, for example, is Parkview, and it's in Miramar, Florida, right?
Mhm.
It's in Broward County, and it's in the city of Miramar. And when you see, because I'm saying this because I was frustrated when I saw the cost of these new bills, right?
Oh, yeah.
I'm sorry.
I said, oh, yeah, no, I'm agreeing with you. Yes.
So the costs were starting at over a quarter of a million, of course. It was starting around $350,000, right? And because I took the extra step of not being discouraged, I took the extra step to reach out to some of these people, and I found out something, and I'm gonna give you this information so you can do with it whatever you want to do with this information. When you see those new bills that's coming out and you see that the prices are high, always, always, always check to see what's going on for the prices, because I found out from a nonprofit, right, that's in Broward County, that a lot of these new bills have money from HUD. So there, even though the price listed starts at $350,000, some of these new bills give up to $200,000 in down payment and closing costs, because HUD have, it was $71 million before. Now they release over 90 now for affordable housing. So when you see these price and it has affordable housing on there, do not be discouraged. Inquire, 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 because I know if I felt that way looking at these homes for my community, right? I know people feel discouraged because they're looking like there's no way I'm gonna afford this home if it's starting at $350,000. There is money involved. There are tax benefits for the builder, and there's a lot of things that they're not putting on that simple sign, that big sign that you see in the front, new homes starting at this and this and this. It's not written there. So you have to reach out, and you have to be specific when you reach out about the down payment and the closing cost options, because they are available, but they're not going to voluntarily tell you. You have to take that step yourself and the initiative yourself. Because I've spoken to a couple CEOs and the money is there. It's just that it's not being advertised. Okay. So
I'm
that's,
glad that up because something with builders also, um, there's too much, there's so many homes. The builders own the homes. They're not in the business of holding these homes. So normally you can negotiate with them more because they own the home. They're the ones that are going to dictate the property price.
mhm.
So normally they may give you some help because they don't want the price to look like it was too low, but they can that incentive by like what you're saying, the extra money.
Yes, yes. That's why the price posted is what the price is posted, because they don't want to drop down the value of the other homes in the area. So you have
Exactly.
to take that step to inquire from them, because they're getting their tax write-offs. They have their money from that came down from Washington and everything to build these homes, but they can't drop the price visually on this board. So it's I don't know what you call it, but there's a gray area and you have to
Yeah,
know the gray area. And I'm
Layla
here
Vassar,
for that gray area.
Layla Vassar wants to know, how do you get that information?
Well, how I specifically get the information is I am a part of several communities. Um, I am part of several communities and nonprofits, and I reach out and part of several commissioners in Broward, in Miami-Dade. I haven't reached West Palm Beach yet, but I'm trying to reach the politicians in West Palm Beach because they actually post these things up because when it gets close to re-election time, it's a game. It's a game, right? And you have to know the game. When it gets close to re-election time, there's a lot of information that's flooded out there. Do not pass the information because you will see these things on social media. You will see it come up on Facebook if you have Facebook. It depends on your age. If you have Facebook, you will see it pop up. I don't have TikTok, so I don't know if they put it on TikTok or not. But on Facebook, you'll see sponsored by the city of something on there, and then you're gonna see it popping up. And do not get discouraged with the price. There's a reason why the city has that up there. Inquire, inquire, inquire. I cannot say that enough. Inquire. Okay. That's how
So
you.
basically, Layla, to answer your question, you want to inquire. So I would do what I was saying about if you go to realtor.com and you don't know exactly where you want to live, put in zip codes, take a look at properties, and then call of the areas where you do want to live, call whatever you see and find out more. Don't just go by what you see, especially if it's by the city. Call and question because they probably have assistance. But if you don't ask, you don't get. And
Any
like I
more
know
questions?
City of Lauderhill has a great program for that 15-year mortgage. Do you have all the details on it, Sharon?
I
No.
have the details on something else and I have to look it up because I
Oh,
was looking at it and I saw about the 15 years and everything. And it was interesting because I'm gonna be honest about something. Um, with my research of reaching out in the community with people who want homes, a lot of people are not trying to stay in the homes for 15 years. They are trying to get the home as a stepping stone for another home. So they're trying to get the home. And so Susie, so you can be prepared when you speak to some of these people, because I've done um some interviews with people. They're planning on staying at least 2 to 5 years in these homes. And then they're planning on either getting a HELOC or a cash out to purchase another property and rent out that property. They're using these properties as a stepping stone
mhm.
because right now on social media, you see a lot of posts about generational wealth, and a lot of people are just tired of being poor, to be honest. They're tired of being poor and they're tired of poverty passing down from generation to generation. So a lot of people are doing that. So it's kind of hard for me to talk to certain people about the Lauderhill thing because they're not willing to stay that period of time in the home.
I hear you, and I know that like most people refinance, you know, every 5 to 7 years at the same time. So the thing is there that if you get into the property, and we always have an idea at first of what we're going to do, and then things may change, right? So you get into the property and you have every desire to sell it in 3 years, or maybe in 3 years you're loving it so much and you've done things to it where you want to keep it. We don't know, right? But definitely, if at least you have something to start with, you can make those decisions. And that's why it's so important for people to own a piece of land. You know, own it, even if it's less now and you upgrade. I mean, my mom did that. She bought a home, she paid it off, and now she rents that home out and she lives in another home. She lives in another city. And you know what? I've been collecting her rent for over 30 years. So you can definitely do it. You just have to also consider being a landlord is not that fun at times. So you definitely might want to have a property management company that handles it so that you can take care of, there's some months where maybe it's not rented. I mean, sometimes I've had great renters for 10 years. I had lousy renters for almost 4 years where they were, the place was empty for too many months. So that's just also something to definitely take into consideration, that I think as long as you always plan on the fact that, okay, as long as this machine keeps functioning and everything keeps going, everything's fine. What happens the day that the machine doesn't feel well or something? How can I still be fine? Which one of those things, of course, obviously by, insuring your valuables and things like that. And that's why I also, believe in the life insurance and term insurance for things, so that you can have that generational wealth. And that's the same thing. Like, I don't want people to get into a home that they can't afford, because then what was the purpose, And so many people end up getting bad information and getting into too much of a mortgage, which is really sad because it sets a bad domino effect. I want people to own homes and to own homes that they can stay in and use like they want to, so that they can become more prosperous. Refi it. And there are home equity loans that are available versus the home equity line of credit, so that way those are amortized over 20 or 30 years, because with the home equity line of credit, you get on the amount drawn, normally it's 10 years that you don't pay, and then you start paying after 10 years. So the payment is higher than if you went with a home equity loan, if you know exactly how much money you need.
So right now, Fort Lauderdale.gov has a housing rehabilitation and replacement program. It says assistance for eligible homeowners through the city to bring homes up to standard. And there's a purchase assistance program, and they are using two companies right now. One of the companies is Housing Foundation of America.
Okay.
And their phone number is 954-923-5001. The other company is Oasis of Hope, CD as in David C. And their phone number is 954-586-1283.
Thank you so much for that. I'm going to put my business information here in case anyone wants to reach me.
So Broward County also have, I was waiting to see if anyone had any questions for me to drop all the stuff that
all the nuggets, drop them.
No one has any questions, so I'm about to drop some information for everyone. Awesome. If you go to broward.org, they have a mortgage credit certificate program, and it's to help new homeowners and existing homeowners in Broward County, right? And it's for low and moderate income families. And I wish I could share this, but I'm using a Google and I'm on a MacBook. If I was on Apple, I'll be able to just airdrop it to my Mac, but I don't know how to do that from the Google website, from the Google platform. So depending on the size of your family, right? The mortgage credit certificate program, income and acquisition cost limit, there's a cost limit and there's an income limit. And for the income limits for families with one or two is 96,000. So it is pretty high. It is high, right? And income limits for families 3 or more is $110,400. So if you find a home, but of course you have to qualify for this price of home. So let me just give that tidbit of information right now before I say what I'm going to say. The home, if it's a 1 unit, you can qualify for over $500,000. If it's 2 units, it's over 700,000. 3 units, 800,000, and 4 units, over $1 million.
Oh,
So that is what's going on right now. As of July of last year, July 1st to be exact, they have it highlighted here. July 1st of 2023 for Broward County. So one is for Fort Lauderdale specifically, and the other one is for the whole of Broward County, which includes a lot of cities, because Fort Lauderdale is just one city.
mhm.
Yeah. So anyone can use that information, and I know we're over time, but I wanted to give that information at the last second before we.
Thank you so much for those nuggets.
Yes.
Thank you so much. And I just want to thank everyone for attending. I hope this was useful to you. And if you have any questions, feel free to reach me. And as I said, my website is fitmortgagesandmore.com. I also do life insurance and health insurance, but my main focus is on mortgages and helping everyone become a homeowner. Thank you.
Thank you
And
so
thank you
much.
again, Sharon. It's been my pleasure.